Ladies and gentlemen of the crypto space, we're live on a Friday, July 16th at 11:42 a.m. Let's make sense of some stuff that a lot of macro folks talk about, and this stuff just paints it, or my mind sees it a certain way, and I'll describe what I see. We'll look at some charts, we'll look at some data, and we'll do some speculation. In the end, we'll only know in hindsight. We'll have a bunch of folks have plenty of different theories, and one of the prevailing theories is the higher prices will be rejected. But why would higher prices be rejected by an ever increasing wealthy population that don't care about 5, 10, 15, 20% increase in prices because they've made millions of dollars over the last year and a half? So I don't overwhelmingly subscribe to that theory. I think, in fact, for the wealthy, they won't even think twice about slightly or even moderately or even a large increase in pricing. So I see a big mutual exclusion between two phenomena that macro folks often talk about, which is basically dollar bullishness and purchasing power. I don't see any direct correlation. If anything, there's a plethora of layers in between the effect of dollar demand and how that plays into the purchasing power of the dollar. Well, let's go through the sequences, or at least a couple of the steps in between, and we'll see if we could come to any decent conclusions today that have any meaning. In the end, we'll only know in hindsight. Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social goods. Stop depositing on exchanges, not your keys, not your crypto. Non-custodial, DeFi, or nothing at all. Let me check my audio real quick. Bear with me a second. Sound, sound, input. Oh, that's why. Toast, toast. There we go. That's back in action. Let's pop it over to the main screen and see who's in the stream. Sure is in the house. Hey, Noah, are you enjoying 125% ICE native staking or sold? They're buying ICE from the open market. So there's no dollar yield. There's no revenue stream. So you would have to sell your ICE in order to capitalize on a daily and weekly basis to pay bills, so on and so forth. So while I like the tokenomics and I find it interesting, it's not something that I'm interested in deploying capital to. It would have to be in a large percentage, which means I'd be choosing between my primary position and what they're offering with regard to a primary revenue stream. It's a nice yield percentage, but um, I would I wish it was the actual transaction fees provided as revenue. Um, it's nice that it creates the constant buy pressure on the ICE asset, um, but we'll see how that plays out. I'm never first, and I'm never last. So I like to see new protocols tried, true, and tested. Tried, tested, and I don't know, some phrase like that. But suffice it to say, I don't need to get in real quick. I don't care if it goes down to 60, 70, 80%. 30%, I don't even care if it goes down to. What's pertinent is that the protocol and ultimately the monetary policy for the asset supply plays out favorably. And you don't have to capitalize as fast as possible on new stuff. That's a fallacy, and it's increased risk, substantially increased risk profile. I got to get in. It's. I'm early. I'm first, and I never want to be first. And a bit of a contrarian way of thinking about, especially in the crypto space, because everyone wants to be first in the crypto space. They found something new. They found something hot and big, and I don't want to be that person. I don't want to be a guinea pig. No, no, no. Stops in the house. Ding, ding. Thank God it's Friday. You need more crypto? Hey guys, Hunter, Morning Noah, Macro Mind. If you view your CRV position as a business, why not take that Bitcoin out of cold storage, take a loan on Aave, Curve, Play, ARB, CR, increase your business rev? Yes. Vast majority of my capital is not in Bitcoin. I think there's it's stagnant equity in many regards, and sure you could take on debt, and I'm just not in a position to really want to take on debt. I don't want to manage a business in that regard. I want cash flow, capital gains with little debt, which means I have no risk. And I don't have to deploy excess work to manage the debt positions, of which there's a lot of protocols that are coming. or in development that are managing debt positions much more strategically and automatically. And you always have DeFi saver, which is quite interesting. So that's something to consider. Bear in mind, debt positions will not be the entirety of capital. So depending on how much you're playing with, you're probably only taking out 30, 40, 50% of your equity, or tapping that much percent of your equity. So you're going to significantly reduce the amount of capital deployed for generation of cash flow purposes. Something to consider. Clearly, if you have $100 million and you're going to put $30 million to work, you're going to generate a nice income. But if you have 50 grand and you're going to put 15, 20 grand to work, big difference between 15, 20 grand being put to work and 50 grand. So 10 grand or whatever it is. I'm throwing around numbers left and right here. RJ, a pleasure. Adam, sup Noah, thought ICE was profit sharing. Is what they say here misleading? No, it is profit sharing, but they're taking the profits, the transaction fees, and then using it to buy ICE on the open market, creating a constant buy pressure, which is interesting from a policy and a protocol standpoint. So I'm not going to knock that in any regards, and that's something that I like to see, a constant buy pressure using from a sustainable source, which is transaction fees. It's quite fascinating. Stake your ICE token to obtain NICE in order to take part of the 10% fee sharing of the popsicle finance fees. Yeah, that's more or less the situation. So what's chart do I have up? I have M2 velocity. You guys keep throwing out those questions, and I'll hit on them. No doubt. But I wanted to talk briefly about what I see playing out in macro land, meat land. So M2 velocities is tanking. Wells Fargo stopped personal loans, and people are maxed out on credit, and it's through the roof. If you look at those charts, I don't have them up at the moment, but credit is through the roof, and but M2 is still tanking. So obviously M2 money stock is vertical. So they could folks could argue that the calculation for M2 money stock has been modified significantly. But what do we have? We have an increasing deposits and basically capital, and that has the potential for circulation, but it's not in circulation. It's not circulating. It's stagnant, and that means you don't have growth. And I've always said that the exciting thing in the crypto space is a vertical velocity, where Aave and Cream and MakerDAO and a variety of other protocols are issuing debt, and that creates money via the way traditionally the commercial banking system created money with double entry accounting, and is clearly not a chart looking like this. So the meat world economy has a collapsing M2 velocity, and that's disappointing to say the least. You know, this plays into companies. If companies can't get credit, take on debt, they can't do expansions, they can't start a new factory, they can't borrow capital to acquire new supplies, and that affects supply. And but the whole point of the title of the stream was that from a forex perspective, dollar bullishness, where the dollar significantly goes up in price on the DXY versus other currencies. I really see that as mutually exclusive to the purchasing power of the dollar, with layers of grapevine, layers of many layers in between. So really, dollar bullishness from a forex perspective comes down to who's printing. Printing is the velocity of the printing press of various sovereigns, or central banks rather. Difference between a sovereign and a central bank. But the purchasing power of the dollar is related to supply and demand. Just it's the same thing when you're looking at stocks and you want to purchase something. It's supply and demand. If there's increased demand relative to supply, the price of stocks goes up. Same thing with goods and services. If you go into a supermarket, so on and so forth, price goes up. If there's less supply and there's the same, if not equivalent demand, price will go up. So what do we know? We know that the wealthy are made a fortune in the stock market over the last couple of years, and there's more capital in the hands of fewer people than ever before. And they're not going to slow down or stop. They're just going to keep doing what they're doing. So there's going to be a constant buy pressure, constant demand on this goods and services. It's not going to stop. And the minority consumes the most. And I anything we think will play out is speculative and we'll only know in hindsight. But like Stephen Van Meter speculates that these higher prices will be rejected by the majority, but the majority doesn't have the majority of capital. In fact, the majority has an ever decreasing uh, total ownership of outstanding capital. The majority own less and less and less and less and buy less and less and less and less. And basically, what I see playing out is disparity, where the majority can buy less and less and less, but the minority keep buying the same. Their habits don't change. There's just a constant demand pressure on goods and services, food, so on and so forth. Go in the Whole Foods, it's packed. It's packed. There's no shopping cart coming out of Whole Foods less than 100, $200. It's nonstop demand. So, I expect basically to play out DXY bullishness through the roof because the dollar is very powerful compared to other fiat. And yes, obviously, the relative velocity of the presses come into the picture, but as other fiats are significantly more vulnerable because they're not a reserve currency, the demand for the dollar, in theory, and speculatively will significantly increase. So dollar bullishness, long dollar forex positions, or long dated treasuries, as the curve flattens, 30, so on and 30 years, so on and so forth, will significantly increase in bond price, and that's how you play dollar bullishness. So why is dollar bullishness considered deflationary? Now I love Stevens the way he talks about QE being deflationary because they're pulling the collateral out of the markets, and that's extraordinary the way he talks about it, and I find that inflation and deflation are terms that are thrown around, but they're very loosely. They're thrown around loosely relative to a state of the system, but something is inflating or deflating. If the price of something is going up, it's inflating. The price of something is going down, is deflating. So basically, deflation and deflation is relative. Is basically means going up or going down. Is the supply of something going up? The supply is inflating. So I just think inflation and deflation are terms that are thrown around very loosely, and it's a very relative term relative to a very specific thing. Um, consumer CPI, consumer prices are inflating. The demand for dollars is going up, so the value of the dollar is inflating. But if the price of goods and services is going up, um, that value of the dollar is only relative to other fiat. So if the price of goods and services is going up, there's no direct correlation to the price of the dollar going up relative to other fiat. The price of the goods and services going up, it's still denominated in the unchanged dollar, the unit of account, the common denominator. And that translates to salaries. If the price of goods and services goes up, the only thing relevant is how many units of account are provided by a salary, because it's a fixed value. So it's an unchanging value. It's one unit. It's a unit. See what I'm saying? There's mutual exclusion there, boys and girls. And my expectation to play out is significant disparity, and that's what I see. And that's disappointing. And that brings me to the crypto space. Let me go through some comments. Somber topic of conversation in many regards. Patrick picked up some nice CVX CRV on discount this morning. Still not sure what I want to if I want to actually buy more CVX. Feel more comfortable buying VCRV, CRV, CVX CRV. Sure. I mean, honestly, these markets are going to get hammered. Um, Historically speaking, I have no interest in reallocating capital. I have my specific units of these assets. This is the appropriate place for the capital to be deployed. I'm not too concerned about dollar denomination. I work, I get salary, I have a capacity to be employed no matter what. And in my industry, there's plenty of work out there. Nobody's working because of basically the United States UBI policies, which are pretty much in effect. So there's a lot of jobs and a lot of places to get significant income. So where my stored capital is deployed, I am overwhelmingly comfortable with, and I don't have any, in any way, shape, or form, a short-term time horizon. I have 20 years until I retire. And what I do is I think about where my capital is best served. And it's best served with projects that are reflective and respective of my opinion and how I feel as an engineer. And these projects make me feel comfortable and content and satisfied. They're deployed to the right place, is the way I feel. And sure, they'll depreciate dollar denominated significantly, but I'm content with that because I know where my capital is. I know what projects I'm involved with, and that makes me happy. And that's important. And I'm respecting my gut instinct. And I've always said to everyone, it's not about making as much money as possible. In many regards, it's about self-respect, and you clearly have to have a diversified portfolio. I mean, no one thing best serves a portfolio. It just, as we're talking about in this stream, we're talking about deflation, where what's classically called risk assets, where there's significant volatility, which is the securities market and the crypto space. But we also are expecting dollar bullishness, and you do that with long dated bonds, longs, or just owning them. Bond price goes up, and dollar long positions in forex markets. So we know how to tackle deflationary protection. We know how to tackle inflationary protection, which is strange because we talk about deflation and inflation as I just said it, but what if you have it at the same time? I just said deflation protection with regard to the value of the dollar going up. It's a strange phrase. Deflation, inflation. So what? Maybe it is misleading for me to even say those words. What what I've attacked is a strong dollar in forex markets, and I've attacked an increase in dollar supply, which is being dispersed amongst many asset classes, which triggers supply and demand price appreciation. And we sure as heck know we have an increase in dollar supply. And that's why the stock market did what it did, and that's why the crypto space did what it did. And those dollars don't just evaporate into thin air. What they do is get redeployed for short periods of time. So when you have like a serious equities market correction, or the crypto space makes a correction, the dollars are there. They're sold for dollars, and people take it out, so on and so forth. And what are they doing with them? At some point, it goes back in, and that's exactly why we saw the market cycle 17 and 18 and 2021 thus far. The capital came back in, except this time the capital is 25% more. They printed 25% of all dollars in the last year. That's craziness. It's crazy sauce. Let me hit some comments. Mike's in the house. Adam, any thoughts on the decreasing percentage of daily curve emissions being locked in CVX CRV over the past couple of weeks? Yes, because people are taking their profits and they expect volatility, and that's probably a large amount of FTX, and they're selling their yield because they expect the markets to decline, and they're trying to protect their dollar-denominated gains, and that's the way it works. There's no reason you don't have to not consider selling your stuff, but then you have to figure out when to get back in. And that's just not something I'm interested in. I want to go on vacation. I want to enjoy the weekend with the kids. I have a business trip next week, and so that's really what I want to think about. I don't want to be thinking about when am I going to buy, when am I going to sell. I find that train of thought frustrating and antiquated, and that's how a lot of people play the securities markets, and that's not how I want to play them. I want to play passive. I'm a passive investor. I know where my capital is best allocated to best respect my opinions and my sentiment. Heirlooms in the house, always a pleasure. Red Rum, greetings from Italy. I just want to thank you for changing my thought process. You're very welcome. Very welcome. I can't guarantee I'm going to say the right things to make everyone money, but I'm definitely going to say the right things that everyone will respect themselves and find choices and actions and positions that bring satisfaction and content and honor. These are honorable positions. You know, a lot of people just will criticize deploying capital to crypto or deploying capital to a particular crypto or a particular platform. I'm sorry. You know, I've been around a bit and I've deployed to securities markets. There's no honor in them. It's gambling and speculative and clearly that's the case in the crypto space with a variety of or just a broad spectrum of the degenerate behavior, just rampant gambling and debt, and that's perverse. But you know, I'm this is where my capital belongs because I feel there's honor in these projects. My intention or interest is the disintermediation of financial services, and that's the type of position where I want my capital deployed. Be the bank. Be the bank. Mix in the house. Ciao. Sir Joe, present. Patrick, Adam, I believe the APR is based on price of the assets. Yeah, so, well, APR is dollar denominated. So the dollar denomination is misleading. So what happens is you'll notice that the asset quantity is basically the same, if not increasing, depending on transaction volume and depending on liquidity influence of the contract's platform. So you'll notice the asset quantity is the same, if not increasing, likely. Haven't looked at it, but you could probably make that determine that. So the dollar denominated value is obviously all over the place. Mix, wine and rolling eyes. Yeah, this is a wine type of conversation. Jacob, hey Noah, what's up? Have you seen Tomb Finance on Phantom? I have not. Uh, Os Osarco. I got it. Hey Noah, thank you for all you do. I just listened to Chris Black on Nuggets News talk about multi-sig risk and DeFi. Curious to know if Curve and Convex have the same security risk. The appropriate person to inquire about that is Chris Black himself. That boy does significant due diligence, and I very much respect his opinions. Bear in mind, I think he follows me. I think he would very much agree with the statement. Sure, you'll have security concerns and security risk, but that's the nature of value allocation as a risk assessment process. There's no such thing as deploying to any asset class without risk of appreciation, depreciation, or security. Uh, I've got plenty of stocks that have gone bankrupt on me and lost the whole thing. And there was no recourse. The capital was gone. It was a securities market rug pull, fuckers. So it's a very rational statement that, or rational statements and thoughts and work that he does, and I think he would agree with the rational statement that the extent of everything that we do is a risk assessment process. Started playing with Terra, 20% fixed. I think we can do better than Terra. It's all good if that floats your boat. You know, in the end, I guess my goal for you guys is to find your comfort zone and to do less work and to pursue revenue streams and to be able to sleep at night and to know that your capital is respecting your opinion, respecting the way you see markets, expressing the way you see markets. And so many folks have so much anxiety of deploying capital, and that's what I want to alleviate. Because the last bag that no one wants to hold is dollars. So we have to deploy the capital. So in order to deploy the capital, you have to have a good time horizon, be able to be comfortable with the positions you take. So if that makes you comfortable, that's all that matters, my friend. Mix saying hi to Italy and agree with the sentiment of how helpful your outlook is to learning DeFi. Yes, DeFi. You know, the securities market has been neutered of yield. There's negative real yield everywhere, meaning you get in 2, 3, 4% from a REIT or a preferred stock, or even just a common stock, you're losing money. It's losing money because it's not CPI is in the fives, but that's not what you're paying with regard to goods and services expenses. You're talking 10, 15, 20%. So Crypto's the only hope. Unless you want to start a business, unless you want to do venture capital, and not many people have that kind of capital. Start a business or speculate out on the risk curve. Some would argue that the crypto space has an increased risk profile as compared to the legacy securities market. Yeah, okay, with all the zombie companies running around, what a bunch of bullshit. No, is there any advantage to locking up Curve directly on Curve Finance? Sure, governance rights. You have a capacity to vote on the Curve DAO. I guess YVE Curve, I believe if you look at Yearn's governance portal, I believe you have a voting capacity. But at least with the E-Curve, you have a capacity to directly vote. And that's the significance there. You probably will speculatively have that with Convex as well in the future, but obviously until it arrives, it's a speculative thing. Patrick, non-crypto question. What are your plans for the weekend? What do you and your fam do for fun? Well, I constantly freak out that the state of the economy is unknown to the general public. So my wife wants to strangle me half the time because I relate everything to our financial situation and our financial realities. And I'm always frustrated that the general public is blue-pilled. You take the blue pill, and I'm going around enjoying things. Like we go to maybe a theme park or go in the pool, and I'm always like, or we're going out to dinner, and I'm always thinking about financials and the financial implications of it, and trying to be prepared and protect myself and my family and my friends for the future financially. So I'm always thinking about expenses relative to the amount of capital that's available, and do I need to liquidate assets? Did I make enough income that week from work? My mind goes in 1,000 directions. In many regards, I do have a fair amount of anxiety, and I probably attack the markets and have my value allocations as such, so I don't add additional anxiety to something I already have a fair amount of. Mix. The peg there seems reliable, and they also incentivize the action with anchor and mirror. Lovely, it's all good. If it floats your boat. Personally, you guys know where my allocations are, and that's all good. What I do is not necessarily what you guys should do. And in the end, what should drive what you guys do is reliability, risk analysis, risk assessment, opportunity cost assessment, and comfort. You have to be comfortable with the position and have like a 4, 5, 6 year, 10-year time horizon. Have a long ass time horizon and grow a revenue stream. Build that shit. I'm just saying. That's the whole point of this. Tired of this buy low, sell high bullshit. You want weekly income that pays real bills. Anything else doesn't make any sense. I can't stand these locking protocols where people say they're making a fortune on paper, yet they haven't paid a single bill. Now, everything changes if you can pay a bill, and these locking protocols it can change. But if you can't pay a bill with the price go up, what does it matter? It doesn't matter that the price went up. You can't pay anything. So time will tell. Clearly, I'm hinting at particular projects, but maybe then speculatively it plays out very well for them. And God bless. I'd be very happy if things play out well for protocols like Hex, and people in a couple of years are able to sell for millions of dollars, and all of a sudden they're super duper rich. I'd be very happy, and that's a good thing. But that's a very long term time horizon. And for me, I care about Friday, the 30th of the month. Can I pay a bill? And if I can't because something is restricting me from accessing the capital, it's not useful to me. I need to be able to pay the bills. So, I don't, just saying. Not being super critical, and there's a lot of speculative things, and I like the way Raul thinks that we'll only know in hindsight how well a protocol functions. But really, my focus is if you can't make money on a weekly basis, what's the point of the position? It's useless to me. Let me hit some questions. I'm going to wrap it up, though. I got things to do. I'm yet to establish a curve position. Is it better to enter curve LP than convex, or buy curve stake on convex? Well, it's obviously your prerogative, and it's your capital that you're deploying. Obviously, the prices are significantly depreciating, and the market's extremely volatile. I mean, look at this. I question whether Bitcoin's actually going to roll over. I mean, the legacy financial markets are under significant pressure. They're significantly overextended. Basically, the legacy markets are up here, and Bitcoin has already corrected. So, we'll only know in hindsight if Bitcoin bounces off the bottom of these guppies. So maybe 30.2 is the bottom, and it makes sense. Was it the 50-week moving average? People are looking at the 22-week. They're looking at a bunch of long-term weekly moving averages for price support and stock to flow and all that stuff. I mean, really all comes down to Bitcoin, how things behave. But curve's under significant pressure. It broke down below trend against Bitcoin. I was disappointed to see this break down. We'll see what happens. Maybe it recaptures the trend line. That'd be nice. It broke down significantly versus Ethereum, literally at the end of the triangular compression. And that is what it is. So, if you're going to deploy capital to one of these positions, expect significant principal depreciation. Now, the revenue's the same. The revenue's nice. The revenue just keeps coming in and in and in. But that requires a lot of retraining of how you mentally process these types of positions. Um, and it's that I don't have answers. I just have analysis and opinion, and I tell you guys what I do, and in the end, you have to be able to sleep at night and be comfortable with where you allocate value. I think that's the best way I could describe it, my friend. General public, same pain every day in my heart. They just don't care at all. Completely indifferent, oblivious, blue pilled. Man, the Matrix is the best way to describe the way the general public sees self-fiduciary responsibility. Mike, that truth, that's all we want, in my opinion, to protect ourselves and families in uncertain times. That's all. That's what everyone wants. Austin, what do you think about Mirror Protocol? Yeah, it's pretty cool. Peg to stocks, which means you're speculating on appreciation and depreciation, because these stocks and Mirror Protocol synthetic versions don't offer any returns. There's no yield, there's no interest, and I have no interest in speculating whatsoever. Um, oh, Mir fees. All right. Well, that's interesting. Well, I do have a Frax position because their FXS 1559 protocol is absolutely fascinating. So, I do delve outside of my core position. I have plenty of positions. You guys know all my positions, really. But that's something to consider. If mirrors, yield bearing, and transaction fees, that's a big deal. And ICE is a big deal. And just because I don't do something doesn't mean it's not something you guys should completely dismiss. In the end, as I say and will say, you have to be comfortable with your positions chosen. Okay, paying more and still paying attention. Mix. Ding ding. Yesterday, I delivered a talk on crypto to our branding agency in the UK. Some staff from Canada. I shared some thoughts learned from Noah. Hope the messages got passed. Thank you, Noah. You're welcome, my friend. I'll keep doing it because this is one of the few things that makes me happy. See if I can help some people. All good. I'm experimenting still and looking at curve as well, Captain. You're very welcome. Hard choices, very hard choices. Zach, remind to the people with a few thousand Badger DAO CVXCRV is your best jumping on point. You can participate with $100 and begin to see growth. Sure, it's compounded CVXCRV position. Now, bear in mind, my recommendation for anyone new to crypto is to stick with dollars because they're not prepared to handle the volatility. They're probably not even best suited for the securities markets. The volatility is just extreme and going to be significant in the short term. So the best place really to recommend to anyone new to the crypto space is dollars. And you grab a stablecoin position, you throw it on Aave, and you teach them about money markets and banking and savings and spending less than they make and accumulating capital. And then once a person gets accustomed to, the DeFi contracts and clicking and token security and hardware wallets, and then they could explore the risk profile and pursue recurring revenue streams. But don't tell anyone to buy assets. That's my recommendation. My recommendation is if they're going to get new people want to get involved, they start with a 50 experimentation, getting some stable coins on the Aave. That's the best place to start because then you see your real revenue stream, real income every second of every day. Aave pays you interest. The unbank, Aave unscrews you. It reprograms your brain. Your real bank in Meat World gives you nothing, but Aave gives you every second of every day real yield. Changes everything. Remind to the people with your few thousand. Oh, I handled it, Zach. Let me wrap up the stream for today. You're very welcome, Patrick. Wish you a good one. Friday, July 16th, 12:17 p.m. Oh, guys, I'm off next week. I'll see if I can do the stream. Obviously, I'm on Twitter, and I'll keep you guys posted on Discord. I'm going to see. I don't think I'm going to, I might not do the stream every day next week. Wow, this is the first time in over a year and a half that I might not do the stream. I'm getting sentimental. You guys are going to make me cry. I love this stuff. This is my psychology session. It helps me digest my ideas. Anyway, I wish you all a wonderful weekend. Tell everyone to subscribe. Discord's still hot. I know you guys are under pressure financially and the market's falling off a cliff and doing all this stuff, but I'll be here. YouTube's always free. Discord I know is a premium, but I do that because I want people who really want to be there, and it's a pretty trivial premium considering the revenue streams that we're all talking about. Getting 30, 40, 50, 60% of your money, making more than $10 a week. Just saying. So I'll be here on YouTube. I'll be there on Discord, and I will see you guys next time, hopefully Monday. Talk to you soon. Peace.